we've all been lied to in a number of various different ways. One of them happens to be the terminology that we use, especially in economic terms. Uh, the word inflation, which is, if you watch the alphabet networks, if you watch CNBC, well, Fox News, even right, left, it doesn't matter. They all use the wrong definition for that word, and it seems to be permeating even people that we believe are super intelligent or have various economics degrees or finance degrees or perhaps even run billion-dollar organizations. They're brought on these TV shows and they use this term inflation and they don't even understand it. It's kind of infuriating to me. And even in our college institutions, it's taught this way, having gone through college in the finance and economic world. I'd say probably 95% of the professors. There's maybe a couple of them that I remember that actually taught the proper terminology or where the word derives from and the meaning, and it's not what you're taught. It's not how it's discussed on television. It's not how it's discussed by many money managers. We're just dealing with a paradigm that's been perpetuated upon us for the last few decades. What we're taught is that inflation is supposed to be, the rise in all prices, whether that be gradually or in hyperinflation, go up exponentially, which in fact it's not necessarily that. That's a symptom, or rising prices have to be a symptom of inflation, and not necessarily all prices. When they revert back to their mean, the mean prices happen to go up in a lot of various goods and services, but inflation itself is a monetary phenomenon, and that's a banking deal. That's where they actually print money. So the Federal Reserve is the primary node of that, or the genesis of that. But the actual banking industry, through fractional reserve system, is perpetuating that in the greater extent of what inflation is, and that's basically the amount of money the money supply itself, and what the ramifications are, like the flu. I like to use this term, the flu. If you have a fever, that's a symptom of the flu. It's not necessarily the flu. That can mean a lot of other things. That can be a symptom of many other diseases. So when you have a rise in prices or whatnot, that can be inflation, or it can be a consequence of inflation, or it can be a consequence of other things too, whether it be on the supply or demand side of things. So, one of the things that are perpetuated nowadays is, since our loose monetary policy in the last probably 10, 15 years, well, probably the greater extent, but ever since we'll call it the mid-90s, so a couple decades, it's probably worse. It was, we were a monetary disaster ever since 1913, and especially after 1971. After Nixon, if you ask me, unconstitutionally takes off the gold standard. But I think I lost my train of thought there. It sucks. You kind of lose your train of thought. But anyway, I think I was talking about the flu thing. So it's a symptom, rising prices. Oh, that's where I was at. So people have been, this lie has been perpetuated throughout the financial scene. There's no inflation. Well, I guess it depends on if you're using the real definition of it. I mean, if you use the real definition of the word, there's been exponential inflation. If you looked at the amount of dollars that are in existence today comparative to, well, you name a point in history, let's call it 10 years ago, it's up exponentially and it's ever increasing, it seems like. There was a momentary contraction there when QT, quantitative easing and QT were rolled back. You can see it in the money supply numbers, where some of them they even stopped. I think M3 they stopped reporting, but on the most part, you've had an ever expanding money supply. That is inflation. Now, where the inflation is actually we're not really feeling it as the American public. Where it's going is either China. We're exporting it, so you're exporting that. You're not going to feel the same effects as the rising prices, because that's being offset by actually trading these paper assets, or you call them assets, these pieces of paper called dollars, and we're getting actual goods for them. So we're exporting our inflation primarily to China. I guess you can say that any of our other trading partners, if we're not actually giving them anybody that we're running a trade deficit towards. Secondarily, it's showing up in the stock market and in various other sectors. You look at the valuations and just look at a chart of the stock market. That's where the money goes. So when there is inflation, when there's excess money that's representing the same finite amount of resources, it tends to chase or go into places where it's looking for return. It's looking for real value, and there's a herd mentality. So it's a combination of psychology, one, and then the depreciating asset, which is the money. So it chases into different things. So for one reason, in the mid 2000s, we had the huge oil spike. That was part of an inflationary boom, not necessarily a demand or supply cycle. That plays a role in it, but it's exacerbated with excess fiat currency. So the fiat currency goes into these places, like you see in the stock market now. Well, what happens when we pump some more money in there? God only knows when that bubble pops, where that excess money goes. There is a chance that when you have defaulting loans or whatever, that's a deflationary. It's actually money supply being destroyed, since money is debt. That's another thing that they don't tell you. And seems like generation after 1970 doesn't realize what money really is now. Money is a debt. Every time you take out a loan, essentially you're creating money. And that's due to the fractional reserve system that we live in today. If you look at the way the central bank creates money, you say, well, it just pops it in the air. Well, it's actually a debt instrument. It buys treasury through its primary dealers, and we don't even know exactly all they do. I think some word has come out that they've actually bought debt instruments from other countries. Who knows? They're in the plunge protection team. I don't know if that's part of the Treasury Department, or maybe it's a joint venture with the Federal Reserve as well. Who knows? There's a lot that we don't know because supposedly it's independent, and there's a number of banking interests that are part of the Federal Reserve System. But there's a lot that we don't know about it. But primarily what I guess this whole thing was about, originally what I was talking about, was words have meaning. And when we start talking about the term inflation, it's not necessarily a general rise in prices. Now what happens is when you have these excess money that's representing the same finite amount of goods, starts chasing return or goes into certain assets, whether that be housing, whether that be stocks, or oil, or whatever commodity, or your grocery store items. Who knows where it goes? But when it goes up there, and then the collapse, usually that median or that general new bottom low price is higher. You see that in oil. You see that a lot in oil and in gold itself, and various other assets that went up, like that. I say tech companies, the housing market. But you can see, I think the reason they changed that term is they can obfuscate the fact that there is inflation. They changed it so that you don't think about it as a monetary unit. You think about it just as general rising prices, which is not necessarily is. It's a symptom of inflation, is rising prices, but they're not always equal. Prices can rise in other sectors, and they can actually fall too when that money gets chased out, because there's a psychological component to it. It's not necessarily just a unit of money. The money chases various sectors, and you can see that in there. So right now you have the stock market, and then a lot of the inflation has actually been exported to various countries. I don't know if I explained it as well as I could. It's a little easier when you're just talking. You're actually interfacing with people as opposed to down here. But I'll probably go into it a little bit more in depth in future videos. But that's a general breakdown. Inflation is a monetary phenomenon. It's the expansion of the money supply through either central banks or your fractional reserve system. Or I guess you just simplistically, expansion of the money supply. deflation, contraction of the money supply, rising prices or whatnot, symptoms of inflation. And that's pretty much all you need to know. And then you can do some reading. Mises Institute's a great place to look up this stuff because it's what you're not taught, which is like the Austrian perspective, which is the correct one in my opinion. Even some Keynesians can, if you read certain documents, they kind of allude to it, even though they're the ones that perpetuate the lie. But Mises Institute, Henry Hazlitt, Ron Paul's a good one too. He's got a really good guy to listen to. Rothbard. And then if you're looking for easy reads, this is like your first delve into this, your first mind blown is Peter Schiff's How Economy Grows and Why It Crashes. Check them out.